Welcome back. It's time now for On the Radar, where we ask an investing professional what they're looking at in today's markets. We're back again with Colin Cieszynski. He's with SIA Wealth Management. He's their senior strategist to talk about capital inflows in and out of gold. So let's begin with gold. Gold has taken off almost the moment that SVB failed in California. We saw higher gold prices, and today's gold price is about 8% higher, 7% higher than it was just a couple of weeks ago.
Yes, absolutely. And we looked at over the years as gold is a currency, and gold is the enemy of the U.S. dollar, and that they usually go in opposite directions, or gold is an inflation hedge. And most of the time those are true, and sometimes they're not. But one thing that over time has been pretty consistent is whenever there's stress in the financial system, gold tends to go up. Gold tends to be seen as a go-to safe haven for capital when currencies in the financial system conditions get rocky.
And what is the lesson there? That as conditions become better, for instance, as the U.S. authorities work to stabilize the banking system, gold may lose some of its steam, some of its upward momentum?
It already has a little bit. Even we've seen over the first couple of days this week that gold has dropped back from just under 2,000 to just above 1950. So a little bit of the big run that we saw last week has eased back a little bit off.
What role does gold have in a portfolio? Do you believe investors should have a corner of their portfolio set aside for gold?
Gold is a defensive haven, and it has its moments, and it doesn't have its moments. And one of the things we look at SIA Wealth is we look at asset classes. We look at how equities are doing relative to bonds, relative to cash, relative to gold and commodities and other things. And so there's a time and a place for gold, and then there's a time and a place where other things do well. And we follow relative strength, and we look for the opportunities as they present themselves, both in terms of when to go on offense and when to go on defense.
Do you have a forecast on whether gold can get above $2,000 and stay there?
Right now, it's still bumping up against it. I believe the peak for gold a couple of years ago was about 2065. So it is getting close to, it's within striking distance of its all-time highs. It's within about $100.
It is indeed. Let's go to the Japanese yen. I know you've got some thoughts there as well, playing a defensive role.
Yes, the Japanese yen has been really interesting over the last couple of years because historically it's been a fellow traveler with gold. When gold is going up off and people are going defensive, the yen often does as well. But that relationship broke last year. It broke in 2022 when the yen collapsed because the Bank of Japan stayed dovish. Now, what's interesting is in the last couple of weeks, the yen has been rallying with gold. So that long-term relationship of the yen being a defensive haven along with precious metals has come back after going away last year.
And what do you see ahead for the yen?
The yen, it does look as though it depends. There's a new governor coming into the Bank of Japan, so we'll see, are they as dovish as the previous administration, or are they going to change things up?
And there is a view year to date on the Japanese yen. Perhaps we could extend that maybe to a 3-year or a 5-year to get a longer run view. That's the yen as priced in U.S. dollars. There you see the 5-year. And is that the collapse you're talking about there, Colin, in 2022?
Absolutely. It's pretty clear. And we can see before that, in the first part of 22, it was doing extremely well. And then just the bottom fell out. So at this point in time, as a technician, I'm looking at that and I'm saying, well, are we at a bounce or is that a head and shoulders top? But it's hard to say at this point. So it's something we're keeping an eye on.
Okay. One thing you also keep an eye on at SIA is relative strength as one of your key barometers in the stock market. What have we seen in the different sectors of the equity market so far this year in terms of relative strength? And why don't you begin by just simply explaining what relative strength is?
So relative strength is based on a comparison of thousands of asset classes. Every night we do billions of calculations that compare the price movement of every asset against every other asset, whether it's stocks, commodities, indices, ETFs, you name it. it's in there. And so what that does is that shows what prices are moving relative to others. And then we look at, so what is attracting capital, what is moving up relative to everything else, and what is underperforming, what is losing capital. And so more recently, and as I do consistently, we look at within equity markets at sector performance. And what does it mean? Well, we started the year with a New Year's rally where pretty much everything went up. And then we had a correction recently where in the last month, everything's pretty much gone down. But I did a study of the year-to-date performance of sectors. And what was really interesting was it's very widely distributed. There's a group that's mostly around flat on the year, the largest group. And then there's a few sectors that are down more than 10%, and a couple sectors that are actually up more than 10%. So like when I see an overbought market, for example, then all the sectors are usually really strong, or an oversold market, everything's really weak. But right now, it's really spread out. This is one of the most neutral, balanced markets I've actually seen year to date in an awfully long time.
How do the tech stocks fare in terms of relative strength so far this year?
So far this year, the strongest sectors actually have been the tech and communications areas, right. And the weakest by far have been financials, obviously, although a huge amount of that has come in the last 2 weeks, as well as retailers have also been really struggling.
Colin, thanks.